Alright, yo people, we're back with another stream today, another pre-market analysis video. I'm gonna be showing you guys my analysis for the day, how we're approaching New York session today. So without further ado, let's get straight into it. Alright, so first things first, what we do every day, we start off with a pre-market analysis where we have our pre-written guide for the market, and we just make adjustments to this so we know what we're looking to see today. So what we're going to do first and foremost is we're going to figure out the market type for the day, and my belief is that we're still in a slightly bullish uptrend, even though yesterday we did manage to take a we managed to get a super liquidity at previous day's highs, which we was looking at, and markets went down. So we are still in an uptrend. However, this gap is looking to be filled today. So let's discuss this. So we are still currently bullish. We've already taken previous days. We've already taken our external highs. Has external liquidity been taken? It has been taken, and I'll show you that really quickly. So we'll mark yes for that. And I'm going to go really quickly through this because obviously the market's going to open in the next 30 minutes, so we don't want to waste too much time behind this. But we did have external liquidity be taken, and this is our external liquidity level right here. So we had a sweep of external liquidity right here. We had a gap on the day after the close of that candle. So now we're waiting to see whether or not our sweep of external liquidity results in an aggressive price move back down into the range, and potentially a crash to sweep liquidity all the way down here. So we have the potential for quite a large move to the downside. However, we are not completely bullish yet. We are not completely bearish yet. For us to be bearish, we need to first, at the bare minimum, close below this opening gap. So that's the first thing we're looking at. So external liquidity has been taken. In the potential that external liquidity has been taken, we could take trades targeting intraday liquidity, which is what we had yesterday, and I'll show you that really quickly. We had the rally into the New York session, and then we had a sell through New York into the news event, and then from the news event we've just been going down. So we still got that playbook in the process. We still got that playbook as we have swept intraday liquidity, external liquidity I should say. Alright, so what is the market condition? The market condition is still trending, so we'll leave that as that. Now we want to mark out our important levels, and as I mentioned already, we've got on the daily chart, we've already got this opening gap that's yet to be filled, so we'll mark that out. Opening gap / fair value gap. Then we need to mark out our important internal levels of liquidity. And if we take a look, I've already drawn some of this out. So we've got London session lows, which I believe is right here. This is our London session. Actually, no, I'm mistaken. London session lows is definitely here, because New York session ended at 12 o'clock. New York session pre-market began at 12 o'clock. So we swept our London session low into New York session pre-market. So this is our low for the session. Okay, so what we want to look for next is whether or not we have any previous day or session lows, and I've marked that already as well. Our previous day's lows is this level right here. Relatively important level. Could be important today, especially once we get back into the gap. Could provide us an opportunity to buy the market back up. However, we'll go through some more of this so we can determine where the market's going to go. So we've got previous day's lows, which is important in an uptrend. We'd want to look to position near previous day's lows, as there's liquidity here, and there's also this opening gap, so there's going to be a lot of liquidity here that we'd want to position into as well. If we take a look as well, the hourly chart and the 4-hour chart, whether or not it's in confluence with the overall trend. And if we jump onto the 4-hour chart, the 4-hour chart is currently printing lower lows and lower highs, and we can see that because we was trending higher from here up to here to here to here to here, until we had this massive candle yesterday during the news, and then we've just made a lower low. So at the moment, the 4-hour chart is not in confluence with the overall trend, as well as the hourly chart is also not in confluence with the overall trend, as the hourly chart is also in a downtrend. So that's no good for the buy side. So I'll mark that out on here as well. Hourly and 4-hour candles are currently in a downtrend, which is not in confluence with the overall trend. And the reason that's important is because if we are to go to look for buy trades into this market, we'd want to see price at least in an uptrend on the hourly chart. So we want to see price somehow, break above and begin an uptrend. So going into the session, what we're going to be looking for to see is to see if we can get some sort of decline into our gap that causes a rally and a break of structure on the hourly chart. And if we do get that, we could potentially be looking for buys. And the reason why this is very important is because, considering where we are, resting right at our previous day's lows, this could present as a very, very important area to position at. As I mentioned already, could be a very, very important area to position at, as there's a build-up of liquidity here. So I'm going to keep my eye on that. So going into the session, if I wanted to state out the two ideas that I've got, the first idea buy trades from inside our opening gap, which is near our previous day's lows. We want this to cause a rally that shifts all the flow on the hourly and 4-hour chart. So if we're planning on how we're going to be positioned into the market today, if we're able to see a massive rally from here, somewhere in this gap, to cause this level to shift into an uptrend, and then we could see the market continue to rally higher, and that would be our first opportunity. And that would be our first and probably our best opportunity, as well as seeing it happen on the hourly chart as well. You'd want to see it pull back here. And the reason why that's important is because we want to see the hourly chart in an uptrend, as well as seeing the 4-hour chart also in an uptrend. And if that makes sense, we should begin to see higher highs and higher lows that corresponds with the overall daily trend. So that's what I'm looking at into this session. However, if price continues to decline into the session at the open, I'd want to see whether or not this level is broken. And if this level is broken, then this would be our first indication that we have a shift in trend to the downside. And the reason that is because um, when the market rallies and leaves a gap, that gap acts as a very, very important pivot point to institutional investors. So if price falls through the gap, so if price rallies up and falls through the gap, the fact that our external liquidity has been taken gives us an idea that there's a potential reversal taking place. So if that gap fails to hold, that means that we're going to go back down and our reversal begins to be in play. And this has happened so many times in the past. I'll try and find you a situation. So for example, here in this situation, we had a gap and the gap was filled to the downside. Price ended up breaching the gap to the downside, and you can see we began a short downtrend. I think there's other situations like that. In this situation, the gap held, we continued the rally. In this situation, the gap held, we continued the rally. But when the gap fails, that's when we tend to see, and as you can see here as well, we rallied up the gap. There was a gap here, price declined, closed the gap, and then we began a downtrend. So gaps are extremely important, especially to institutional investors. And because we've got such a big build-up of liquidity on the downside, there is a chance that we do begin our correction and decline. And from where we currently are sitting, or from the all-time highs, it would be about a 7 or 8% decline. And if it was really, really bad, probably about 8%. So this is why we're looking at the bearish scenario as well. But as a trader, you should always prioritize your market bias and prioritize bullish trades in a bullish market, and that's what we're doing. So yeah, that's what's important in today's market. We're looking for buy trades from inside our opening gap, which is near our previous day's lows. You want this to cause a rally to shift order flow on the hourly chart and the 4-hour chart, and that looks like this. Rally up here, and as we keep on going higher, we'll have a shift on the hourly chart, which will result in a shift on the 4-hour chart. And as you can see, we're beginning to hold previous days high and previous days lows, which isn't always great actually, because we haven't actually yet come into the gap. So that could actually be indication of further downward movement for the day. So we'll keep our eye on it. We'll see what happens in the session. I hope you found value in this anyway. We'll continue to watch this. We'll see what happens. We'll continue to watch this. We'll see what happens. Right, so we just completed our pre-market analysis. Going into New York session, we've got about 15 minutes until the market opens. So just really quickly, we're going to analyze the US30 chart. Just a quick summary of what we came to, the conclusion we came to. So obviously the market bias on the US30 chart is still bullish. It's bullish based on the idea that we haven't actually closed below this level yet, and this is our main level to keep an eye on. The reason this level is important is because it's an opening gap, and when we have opening gaps, these gaps are really important. When price closes a bit below the gap, it becomes an indication that institutions are pushing price lower, that the gap is not being respected. We saw this over here. Price gapped higher, gap was closed to the downside, and we saw a downtrend. We saw this also right before the crash. We saw a gap right here, and right after the gap had occurred, we saw a gap up here, gap got closed, and we saw price begin a decline. So when gaps aren't held, when a gap occurs to the upside and it's not held on the upside, we could see extended movements down. So this is why this is extremely important to keep an eye on. However, the fact that we haven't actually had this shift, haven't actually closed below it, means that we have to remain bullish in regards to our bias. So at the moment we have our bullish market bias, we have our external target, which is the highest. Has our external liquidity been taken? It has been taken. And how do we know this? This level here is our level of external liquidity, and the reason this got taken was because we had a rally through it. We had this rally through it on Friday the 24th of October. Following the rally through it, we had the gap, which gives us an opportunity to watch this area, and price took liquidity on the highs yesterday, and it's beginning to now target the gap again. So we have the potential for a reversal to take place, so we'll keep an eye on that as well. Our market condition is still trending. We conducted a session liquidity map, which was really important. We found our opening gap, which is an important level. We also identified a few key important areas of liquidity on our intraday level, which happened to actually be right down here. So this is one of our important areas of liquidity as well, which falls right in our gap. So this is important as well. That level is important. And then we found our previous day's highs as well as our London session lows. And this area right here, this white line is our previous day's highs. That's why this is so important. And this line right here is our London session low, and that got swept as soon as we come into pre-market for New York session. So we're going to keep an eye on these levels as well. However, we're expecting price to, at the bare minimum, sweep our internal liquidity and come into this gap. If we do come into the gap and sweep our internal liquidity, our first trade idea is going to be to buy from inside the opening gap, which is right beside our previous day's lows, and we want this to cause a rally that shifts order flow on the hourly chart and the 4-hour chart. And the reason that's important is because if you take a look, the hourly chart is currently in a downtrend, which we can see seeing lower highs and lower lows. That's indicative of a downtrend, as well as the 4-hour chart is also in a downtrend. We saw this begin yesterday. We saw a rally, decline, and then we saw lower lows occur straight after. So ideally what we want to see today, because this is some sort of a messy consolidation, what we'd want to see is price come into our gap and then rally straight through it. On the 4-hour chart, that will result in this area being breached, and it will put us back in an uptrend. And the hourly chart is much more simpler than that. It's actually just this level right here that will cause us to go into an uptrend. So if we can get a rally from inside our opening gap that gets us above our previous day's lows, which is a liquidity area, that would be a catalyst for further rally up into to continue our uptrend on the daily chart. And the reason why that's the priority for the day is because that's our daily bias. We have a bullish bias, so we should always be looking for bullish trends. Although there is potential for reversal, we have to wait for that to actually play out. We have to wait for this area right here to be breached before we can begin to shift our bias to the downside. So that's why we're going to be very cautious in approaching the session today. We want to see a clear signal that price is going to rally higher, and we want to see that take place inside of our opening gap. So this is our key level for the day. We want to watch this area very, very attentively, and we want to look to position as soon as we can in this area. So that's what we're looking for. That's our first and primary trade idea for the day. And going forward, as we approach the market session, we're going to look to position in there. So that's what we're looking for going into the session. All right, so we've got about just just over 2 minutes left until the market opens. As I said already, we're looking for price to come into our opening gap, fill the gap, and then we're looking for a rally that shifts market. So we're looking for we've got a couple of minutes until the market opens, and in this session we're looking for, as stated in our pre-market analysis, we're looking for buy trades inside our opening gap, which is near our previous day's lows. You want to see the rally from the gap shift market momentum into an uptrend. So what we're looking for is price to come somewhere in this gap, to rally higher, and to shift the hourly chart into an uptrend by breaching this level, and hopefully we can get a close above this level by 3 p.m. And then once that occurs, we then be looking for the 4-hour chart to then also shift into a bullish uptrend. So as we're approaching this level, we'll be looking to take buy trades. If once the market, gets into this area and shows opportunity of a rally taking place. Okay, so we've got about a minute left till the market opens. Wishing you guys best of luck in this trading session. I'll be right there with you. Alright, so first things first, we always want to make sure that we have a sweep of liquidity. So all of this price action, I believe, is just noise. This rally taking place is just noise prior to this sweep of liquidity. I could be wrong, but I think we're about to bounce off this area right here, which is an order block, and then come back down to target our liquidity. Price always needs liquidity before it can begin a directional move. So in my belief, all of this is just noise, and we're coming straight back down to target this level. Um, when we do come back and target this level, we're gonna have to watch what happens over the next 30 minutes, because, as I said already, we want to see price come down into this gap, fill the gap, and then begin a rally. And if we don't get that sort of price action where we fill the gap and then rally higher, there's a chance that we just continue to decline, and that would mean this would be the beginning of our downward trend, and this trend would be the beginning of a somewhat aggressive correction, I'd like to believe, because that would mean that we close below this opening gap, and then we start targeting unswept liquidity at these areas right here. So we've got this gap here, we've got liquidity here, we've got liquidity here, liquidity here. So we've got quite some way down to go from here, but it would first have to begin with us closing below the opening gap. So that's what we're going to be watching for today. And as I said already, I still think this is noise. We're going to wait for the candle to close, which is 12 minutes away. So all of this is pretty much just noise in anticipation. So we still got to wait and see what happens. Um, so yeah, I'm gonna stick it. I'm sticking. I'm gonna be here with you guys. We'll see what happens. Keep our eye on it. I'll be right back. So extremely interesting how the market rallied all the way up to here, which is to this order block right here. I believe we're still gonna get a decline from here. I'm not willing to sell the market into a gap. I don't believe that's the right way to trade. We use gaps as target areas, so we're not going to sell the market down from here. But I'm still expecting the market to fall, and if that does happen, it's looking like a no trade day. If we do get a massive decline, it's going to be a no trade day because we're not going to end up taking a buy trade from inside the gap with a massive wick to the upside. That's just not the type of trades that we take. That's an indication of further downward movement. So I can't necessarily encourage a sell trade from here, and neither can I commit to a buy trade either. But we'll keep our eye on that. Remember, as I said, you're gonna monitor the 15-minute candle closes. When a candle closes, that's when the data is solidified, and that's what we keep our eye on. We focus on the data. We do not pay attention to the fluctuations in price. We only pay attention to the data. Keep our eye on that regardless. Okay, so we got about 2 minutes and 40 seconds until the 15-minute candle closes. My belief is, obviously this is an hourly chart, and this began the uptrend, began the upward move. Um, Hourly's quite bullish at the moment. We need the hourly to close this candle this way, which is about 15 minutes away, and we're starting to see quite a lot of buyers come in. So there is a chance that we've already closed the gap, and we are targeting our highs at the moment. So what I'm gonna do, I don't want to rush into any trades. However, I will wait for the candle to close on the hourly chart, which is another 15-minute candle away, and followed by that 15-minute candle, um, I will position long into this market. Given the state of this rally, I think it's only right to position long. It's a massive, massive move. And what's interesting is, obviously, it was a sweep of our previous day's lows, which I completely understand. Um, what I don't understand is why we didn't fill the gap and target our liquidity. I guess we're just gonna come back down and do that another time. We did get really close to closing this gap though. Um, about 25 pips away. Um, Maybe there's a chance that we're just sweeping liquidity, all of this liquidity here. We're just gonna try and sweep it before the market actually does go down. Maybe this is a sweep before we come down. I don't know at this point. But we want to make sure that the hourly chart, the hourly candle actually does close bullish. And so we're going to monitor how this next candle reacts. If we get a slight pullback, and then we start to see it turn upwards, that might be an opportunity to buy. If the 4-hour chart continues a rally above this level, that also might be an opportunity to buy. So we'll watch how price reacts as we continue to sweep all of these levels here. As I said already, the hourly chart's the most important candle here. We want to make sure that this closes above this level in the next 15 minutes. And if we get a massive pullback, a massive decline, to invalidate that, which is about 150-point decline from where we currently are, then there is a chance that we don't go higher. And as you can see, we've just managed to sweep this level of liquidity on the hourly. So now we're going to watch and see what happens. So as we're seeing a massive rally, and that corresponds with the weekly chart as well. We didn't manage to come into our um, opening gap, unfortunately. However, it does seem like the hourly chart and the 4 hour chart has now shifted to bullish, which is what we expected. This was our trade idea. However, we expected it to go into the opening gap, and then we want this rally to cause a rally that shifts all the flow on the hourly chart on 4 hour, and we got half of that. We didn't get unfortunately, we didn't get the other half of it. We didn't get price coming to the opening gap, which is unfortunate. It's a massive rally. It's about 300 points from the low, right at the open. We're still gonna keep our eye on this. Sometimes you get to participate, other times you just have to watch. There's still an opportunity to get into this trade after the market closes on the hourly chart. It's a massive move. Massive move. So now we've already swept all our levels. So now what we want to wait and see is whether or not the hourly chart does manage to close above here, and for it to not, it has to drop about 250 points. That's really unlikely. It's not impossible, but I would say it's unlikely. Massive rally. I'm not exactly sure why we didn't come into our gap, and why we didn't see liquidity. I'm guessing it's because of the previous day's low. Previous day's low and the London session low as well, which was swept into New York session. Swept, we had a rally above, and then we had a gap and then a rally. So I'm guessing that's the reason why. But that is extremely unfortunate. We had the right setup, but we missed slightly on execution. So we've got the hourly chart confirming bullish in the next 8 minutes. The 4 hour chart, however, is still bearish, and it confirms in 3 hours. We'll keep an eye on this chart for now, see how the hourly closes. I have to say, this rally is incredible. This makes me think that the market is about to go on an absolute tear. These sort of rallies, you don't see them all the time. Like the market literally in the last 15 minutes, in the last 20 minutes is up 400 points, which is absolutely incredible. Let's see how much that is. Incredible. I'm gonna join this. It's up 1% in 15 minutes. That's crazy. It makes me think the market's gonna go on a tear. So what I do want to do, I want to also try and position long. However, I don't want to get in position. I don't want to rush the position. So, as I said, I'm going to wait for the hourly candle to close, and I'm going to wait for the 15 minutes to close as well. And that should be enough for us to get long. I don't believe that we're going to come back down to our gap anymore. I guess we've left it. I was supposed to get long here, but we didn't manage to go into the gap, and so it's a bit tough, but the idea is still to get long. On the close of this candle, on days like this, we might just see a massive rally into the end of the week. This candle was red a moment ago. This is the weekly chart. As you can see, we're already massively green. Same with the Nasdaq. And so it looks like we're about to go on a tear. So I'm gonna get into a position. On the close of the candle. Let me see if we've got any areas to prevent us from going higher, and we do, but that's about 100 pips away. Alright, so the hourly chart's bullish, which supports the daily chart uptrend. So this candle's closing in 10 seconds. So I've just got positioned long with a 100 point stop loss. It is a little bit of FOMO, but there's not really much I could do. I've missed the majority of the move. And so this is the trade. My main belief is that we're just about to rally into oblivion from here, and that's the reasoning behind why the market has been so bullish without closing the gap. The rally that we're looking to see is going to be incredible, probably a few thousand points up today, if I'm right. So I'm going to set my target at, we'll go for 10, but I will take off partials. I think we're going to see a massive close to the week. We'll keep watching this. This is the setup for the day. Unfortunately, we missed most of the move, but there's not really much we can do. Obviously, what we don't want to see is we don't want to see price come back into here, because that would be an indication that the 4 hour is unable to hold its bullish momentum and could potentially be indicative of a decline. And so what we want to see is we want to see a lot of bullish momentum come in. And we do seem to be struggling a little bit. I'll keep our eye on it though. Wow, I've really had a poor week this week, man. I really have. I'm not too sure why, but hopefully this trade still plays out a bullish trend. But I'm off the back on a little bit of a losing streak. I'll show you guys really quickly. So this week I'm down a few percentage points on the one account that I'm currently trading. I do manage a few 100,000, but at the moment I'm only trading one of these accounts. And this account is going into drawdown. Not too sure why. But yeah, yesterday was probably because I overtraded in anticipation of the news, and on Tuesday that was pretty much because I shouldn't have traded on Tuesday, because of the news as well that was happening on Wednesday. So I can understand that, but today's a bit of a weird one. I should not be down on this trade. This trade should be running into profit. It should have done what I wanted it to do though. But we'll see if it still does or if it doesn't. And it doesn't look great. It looks like there's a lot more sellers than there are buyers. Alright, we're starting to see a little bit more bullish momentum. What I expected to see. Still had a poor week. I still expect this to be a massive runner into the end of the week. Given that now the hourly chart and the daily chart is in confluence, the hourly chart and the 4 hour chart is also going to be in confluence. And once we get price above here into all time highs, there's nothing to stop the rally. So it should just be a clean, clear run as long as we could get above there. And then obviously we've got tomorrow as well, which should just be continued rally. And going into a new month, it should just be a massive, massive rally. But we still got quite a bit to do first before we can do that. We first need to get above our current 15-minute high, which seems to be acting as a little bit of resistance. But we'll watch it, we'll monitor it. We've got a stop loss in place, so We shouldn't really feel too much stress from this trade once we do break this level. Keep an eye on it. So watching price action, I'd like to believe that there's a massive resilient number of buyers just looking to just push price higher. And I say that based on the idea that, we had such a massive rally at the open, one that completely took me by surprise. So I would like to believe that, going forward, obviously, if we can continue the buyer's resilience, that we just rally into oblivion over the next couple of days. Um, and I don't think that's impossible, really. Um, so yeah, let's watch what this next 15-minute candle does. If we can get a lot of buyers to come in, then we should be able to